Welcome to Friday, Metalheads. This is Brad, and it's the No Bull Precious Metals Report. Today is July 30th, 2021, and it's, for all intents and purposes, the last day of the month. We've had quite some ups and downs. We've seen silver and gold be up. We saw that mid-month kind of dip. Then we saw a slight recovery. Today going into it, board's looking pretty red. It's not looking too great right now, but let's go through it. Let's see where the week has been. Let's explore a little bit, and we'll see where all the chips fall. As we can see, the big board is pretty ugly today. There is a lot of red. Contrast this with yesterday, and it's pretty interesting to see. Even now, it's 10 o'clock in the morning, so the trading day hasn't really commenced that long, but you figure it's the last day of the month on a Friday as well, so you've got kind of that double header that's going against us. As we can see, the Dow Jones, it's down 0.05%. The S&P is down about 0.33%. NASDAQ's down 0.64%, and the Russell is actually up by 0.38. So the small caps are doing pretty good, but everything else that's kind of the foundation and the backbone of the equities market and really the economy in general is having a down day. And as we look towards the rest of the board, we kind of see, everything is either mucus green or red. So nothing's really having a big up day. So just skipping right ahead to metals, because everything else is pretty much, you get it. It's blah today. So palladium is the only thing in the sector that's really up, and that's up by 0.3%. Copper down by 0.01%. So, we can call it flat. Platinum's really having a down day, 1.64% down. And then gold and silver, they're still riding high after yesterday, but they are down a bit. Gold at 1829.50, down 0.34%. Silver at 25.64, down just over 0.5% at 0.55. In the economic reports, just skipping back to yesterday, we did have our first estimate on the gross domestic product, which is actually up a little bit over the previous, but nowhere near what the median forecast was going to be. Median forecast was hoping that it was going to be up 8.5%. It's actually only up 6.5%, so missed it by 2 points. It is up to 0.2% from last period, where it was 6.3. On the other side of that, we've also got the pending home sales, which in the previous period, they were at 8.3%. Median forecast was expecting those to increase by 0.5%, but they actually decreased by 1.9%. So that just kind of goes along with that softening real estate market, home ownership, building, everything else that we've seen and kind of from the end of last week until this week. And it just kind of sets the perfect topper on that cake of happiness. Today we've got the employment cost index coming out, the personal income index coming out, consumer spending, core inflation, the Chicago Purchasing Managers Index, and the University of Michigan Consumer Sentiment Index, the final version of that. Those numbers obviously aren't in the board right now, but we'll probably talk about those on Monday. On the 10-year Treasury rate, I always want to be optimistic on this, that we're getting back to a point, but, this is kind of a good lesson, and what I always say is that you have to read a chart for what it says and not what you hope it says. And I keep wanting to read it for what I hope it says, not what it's actually saying. And we can definitely see that right now we're definitely in this downtrend. I will throw this line on from this point forward, and we can kind of see, even if we just connect the dots, we're still down. Do we connect it from there, going all the way down? And this is a very non-scientific kind of a method of doing this, but just to demonstrate that, yeah, we are definitely declining, in case you can't see it. We had on previous day's close on the 29th, we closed at 1.27. Currently in today's trading, we're down to 1.24, which shouldn't surprise anyone, based off of the big board, but it is what it is. I'm going to get silver on the 5-day VWAP view. We can see that, we went from yesterday, we had that down day all the way on the 27th. We went all the way through yesterday, the 29th. We hit our high, 11:25 in the morning-ish at 25.82. And then we just kind of slowly declined. As we declined, we nailed right down to that VWAP. Well, not the VWAP, but the +2 standard deviation band right on that 5-day, which is, as I've always said, I always like to see those types of conforming moves that are off of various thresholds and levels. We did see that. Now we're kind of bouncing back up a bit. Since I froze the board, we're up probably like 3 cents at 25.65. If we overlay the previous day, we can see exactly where we're hitting on that. Right now we're just touching the previous day VWAP. The intraday is actually riding a little bit lower. So we've got the intraday in between the previous day and the 5-day. All of those prices are kind of, we're not seeing consensus in the way that, price is climbing or anything else. So we are seeing kind of a mixed day with it. So I wouldn't expect too much in terms of, definitive movements, but we'll have to see where the day goes. I've been surprised on Friday afternoon before too. And gold is still kind of oscillating around a lot. We're seeing not necessarily this nice constrained line that we've got going on, earlier on in the week and what we're normally used to. As soon as we started getting into that increase portion, which I had shown yesterday on volume, we were seeing a lot of just that huge spike that showed up that really drove the VWAP directly up, and we're still making moves. You can see that there's not a significant amount of consensus, and just zooming in from yesterday at noon, we can see that there's a lot of fighting. The low prices within each period, and this is generally a 5-minute chart. The prices within each period are trying to go down during the course of the trading period. Pretty much the closing price is saying, no, we're not going to have any of that. We're not going to keep on dragging this lower. And you can see this battle that just kind of wages on, and it's very interesting, but it's really setting the price. Whereas the closing price, which is up towards the top, and it's the white line, you can see that that's riding middle of the way above the VWAP, whereas the low prices are trying to force it down towards where the VWAP is sitting. Sometimes going below, hoping for some movement, but it's kind of an interesting sight to see just how much these are opening up and what the conflict is within the market right now. But if we overlay the previous day, we can say the previous day VWAP is pretty solid. And then of course, the intraday is really riding solid too, because gold, if we aggregate this and look at it and just centralize where everything is, it really isn't moving that much. We've got some slight waver to it, but it's not like all over the board. It's hanging out right in that 1830 range. And even right now at 1828, it's still just kind of in that same neighborhood. So obviously the VWAPs aren't going to change that much either. Looking at the 5-day performance again, we can see a lot of what we had talked about yesterday, but as we start finishing out the week, we can see that both gold and silver are at almost exactly the same point on the 5-day view. So they're both up 1.48%. They started out both together at 0, and they're both pretty much ending right now at the same place that they were. Kind of an interesting little thing. Whether it changes or whether it stays that way, my money's on it's going to change a little bit just because of the nature of what this chart is and everything. But it's a nice bookend for the week. The gold-silver ratio has been up and down this week. Going through, we started out in the low 71s, bumped up, as high as that 73 up there on this market-based pricing. We declined quite a bit, got into the 70 range, near 71, popped back up, and now we're just kind of riding right there at the 71.34. When we look again down below at the retail to retail pricing, we're still riding at that 62.76. So we're definitely in a period where retail pricing is a little bit higher than normal, where normally I like to see these ratios at about a 10 ounce to 11 ounce difference in the favor of the retail to retail. I like to see retail to retail about 10 to 11 ounces lower than what the market to market is. We're kind of upside down at this point. Silver is kind of flipped itself a bit. Gold is kind of on a roll. We're definitely still in this range. We're not at the 100 ounces to 1 or anything like that, which is great. I still won't be too comfortable until we see that the blue line under 70 and really the red line under that 60 mark. Retail silver is still kind of hanging out, doing the same things that it's been doing. The 1 ounce generic is still on that decreasing trend, although it's popped up a little bit. It's 30.13 today. The Philharmonics, that they're running just a little bit, but they're starting to catch up with last week. The Maple Leaf is up over last week by a pretty decent amount. I mean, it's still down by $1 from 2 weeks ago. Considering all that silver has been through, that's not necessarily a bad thing or a bad price distribution. The Silver Eagle is down again, but who can really, shed some tears over that? We are seeing some decent price movements. However, we do have to watch because prices on the underlying commodity are starting to go up again. So if we look at the momentary average price, we can see there are price increases, especially in this period. Over the last couple days, we are riding kind of flat, which isn't too surprising, but we will start seeing some upward pressure on that. And even right now, we can see some upward pressure on the top side of this. The high price, the low price, and even the average and the median, we're starting to get this upward movement. You just have to watch for it, especially going into the weekend. This could be a weekend where you're paying a little bit more than you normally do, at least, what you would have earlier on in the week. Now, looking at the way that spot is moving, or the way that retail is moving in relation to ship to spot over the last 24 hours. I wanted to bring this chart up because there was kind of a decent differentiation between this. Whereas over the last 24 hours, spot, has declined considerably. It's declined, 1.03% overall from where it was. We're not seeing that with the actual retail prices themselves. We're seeing a lot of it, especially in these ranges coming through. We're seeing that, that there really hasn't been much change in price, especially from, 6 o'clock last night. We had a slight dip, but we got up to, 2,200. 10 o'clock. Overall, there wasn't a significant amount of price difference. In fact, even generic had increased by 0.1% from when this started, and then we started appreciating quite a bit. Prices actually went up, and then even with spot dipping at 2:30 in the morning, we saw that the retail prices really didn't, that they were less than 10% of the dip. So they really didn't move as fast. And these are the types of places where those gains and those lags start to come together. Is that as spot moves, this is where the separation between retail and spot really occurs. And you start seeing a little bit of profit taking, you see a little bit more of loss mitigation, things of that nature that go on. Just I thought it was interesting to bring up and just kind of demonstrate how these prices move over time, especially in relation to the way that spot moves. Retail gold is running pretty flat today. We're definitely not seeing the appreciation that we were like last week or the week before. We are seeing, the most expensive pieces are having the greatest declines. So we're definitely seeing, the 10th ounce American Gold Eagle is declining a bit, whereas we were over 2,700 just a couple of weeks ago. We're now down 2,673. Still not a great price, but it is what it is. The Gold Buffalo, we're still above 2,000. But we're definitely down below. We were at, 2017 for last week and the week before. We've declined another, $15 off of that. At $2,000, I'd like to say it's nothing to sneeze at, but, is $15 really that much of a discount? The Gold Eagle, same thing. We've declined just a little bit, but not a significant amount. And we can see it even with the Maple Leaf as well. We've declined, it went from 1931 to 1927. So we've got like a $4 range, like a $4.30 range. These aren't huge numbers that we're talking, so everything's starting to kind of slow down a bit. And even just looking at kind of these ones, the Panda is roughly the same. Even the Kangaroo is the same. The Cougarand is down about $6. Philharmonic is down about $12. So we're not seeing any of these big drops or anything like that. And actually, depending on way gold is moving, I expect that we'll see a reversal through like next week. So if you're going to buy, especially going into the weekend like this, it's not necessarily a bad time to, if you've got the money for it, because I think that just based off of the way the gold is moving, the pricing's moving, everything else, you're going to see these prices start to creep up again. We're going to see that same type of motion we had for the last couple of weeks. Well, that's going to do it for today and this week, and of course this month as well. So we'll be back in August and see where everything comes together and what goes up, what goes down, if the situation has changed at all, or if we can expect something different coming out of it. Wherever it happens, I'll be here to kind of talk about it and blather and probably give a few charts and see where everything goes. But if you dig what I'm doing, feel free to like, share, subscribe, hit the notification bell, tell your friends, rent a billboard. Doesn't really matter too much. Get the word out. Try to give you the news of precious metals without any of the crap or without the hype or without the mythologies or conspiracy theories. Try to just give you the truth. I try to give you the noble portion of the precious metals industry. And hopefully comes across. Hopefully you find some value in this and you keep coming back. But until next time, happy stacking.